the expectations were that the gross margins would show only a slight sequential improvement because of the higher cost inventory consumed during the quarter. Now, I saw that sequential improvement. My question is, are we behind the high cost inventory, or is some of that would still impact quarter three?
So overall, typically you see that the inventory you carry is about 40-45 days of inventory overall in terms of what you carry. So as we see it, yes, there is a little bit of inventory which has come in because the September sales has been lower than expected to some extent. But as we see, I think the trends for the next quarter seem to be very good. It is definitely deflationary. We are seeing the crude impact now coming in on the derivatives and all the solvent-based solvents which we kind of use overall to that extent. We are almost predicting that the next quarter should be 6 to 7% down with respect to inflation overall in terms of the material cost. Now, which will have a significant impact on the gross margins, easily, I think about 300 to 350 basis points easily in terms of what we will see. And I think this is a slight cyclical kind of a zone where I think customers and analysis should kind of see it more from the point of view of that this is transitional, which is happening. And I think it makes sense not to kind of react by taking, too much of price increases on a very short-term basis, because that's now not how a leader would kind of really operate in the market. So while I think the gross margins have been about 35.6% in quarter two, and if I look at quarter on quarter from the previous year, it has actually gone up by about 0.6 percentage points. Now, the clear reason is that we saw a 6% inflation in quarter one. And we saw another 2% inflation in quarter two to that extent, and larger impact of that inflation came in quarter two to that extent overall. So I would say vis-a-vis that, we just took a price increase of about 3% in the market. So definitely there is an impact which has kind of come in because of the inflationary trends. We could have taken a higher price increase as well, but we then would have to taken a price decrease in quarter three going forward. So I don't think so that we are into the market where we can keep on kind of playing with the demand and the customer prices like this as we kind of go forward. So I think we're very confident that as we kind of go forward, given the deflation, given the good positive demand which we are seeing for the coming quarter, I think we should be definitely back on the normal band on gross margins, PBDIT and PBT as we go forward.